Hi, Gunnar. Good morning.
Morning, Alex. How we doing?
Very good. It got chilly outside last night.
Yes, it did. I got my sweater on today.
Yes, it's like the changing of seasons. It's always happy when that finally happens in Florida.
And I kicked the heat on today at the house. It was great.
You did?
Yeah, my wife's like, "What are you doing?" Yeah, I was like,
Okay,
I'm cold."
I'm not gonna lie. I did too, but I wasn't gonna like admit that 'cause yeah, I love that. Birds of a feather flock together.
That's right.
Well, I wanted to talk today just a little bit about the home buying process, like the very
Mhm.
basics, because it's
Yep.
still very mysterious to a lot of people. Um, so let's just start at the beginning of the timeline. So I get a phone call, and my friends are like, "Hey, Alex, we want to buy a house. Our lease is coming up next 2 months, and we want to buy a house." So my first question to them is like, "Okay, obviously, who, what, where, when, and why, but price is a huge factor." So oftentimes I'll say, okay, well, what's your price range? And they'll say, I don't know because I make this much money, but I have this much debt, but this is how much rent costs. And then they have like a whole waterfall of like concepts as to what kind of house they can afford. So that's when I always send them to you and
Mhm.
you look at the details and we come up with a number. So once I send them to you, could you talk me through a little bit step by step of what that looks like on your end?
Yep. So once you send them to me, which I'm always very thankful for, I work to get them pre-approved. And what a pre-approval is me pulling your credit. Yes, I have to do it. Yes, it's mandatory, but it's good for 120 days. And it's important to pull your credit because it allows me to advise you. I get quite a bit of pushback from, I don't want to buy for the next 4 months because I don't want to get my credit checked. I still really need to check it because it helps me advise you on, things. Other than that, it's just a shot in the dark of, okay, let's assume this is that and that's this. This is what you can afford. But I mean, if something's not accurate, then that completely changes things.
Right. And
Um,
not to interrupt, but I have a question
mhm.
about that because there is a lot of confusion about it. I mean, from what I understand, it doesn't hurt your credit to get your credit pulled. I mean, what, 3 or 4 points? It's gonna.
It's very minimal. Yeah, through two. I always say 2 to 4 points, depending on just the day in which you pull it. Maybe you've been looking for a credit card, something like that, and it's too close to that pull. Maybe it goes 4 points instead of two. But it is minimal. It's when you start getting it yanked multiple times by multiple lenders that it's going to start actually having some effects.
Okay, perfect. Because that's not that big of a deal, especially when you're talking about like the
Mhm.
grand scheme of things. Like 2 points is
Correct.
not gonna make or break your
It's
situation.
not at all.
Okay, so that's one big green check mark I wanted to make sure and verify for our listeners. Okay, so they
Mhm.
get their credit checked.
Get your credit checked. I'm going to gather your income documents from me. So I'm going to ask based on how you're employed. I'm going to ask for certain things. I'm going to gather that from you and we're going to cash flow you. So if you're salaried, it's rather easy. If you're self-employed, it's more of a in-depth cash flow. On my end, all I need the borrowers to do is send me documents. And this all takes about a day at the most, as long as they can send me everything they need. Sometimes if it takes longer, it's because it takes them a while to find tax returns or something like that.
So
Um,
when you say send me everything you need and then you brought up those other things. So that's typically gonna look like bank account screenshots and tax returns or what?
Yeah, so I'm typically, depending on how we're paid, I'm always going to want to see your most recent year's tax returns, your most recent 60 days worth of pay stubs, and then your bank statements just showing, kind of where the funds are coming from. Or if the funds aren't coming from your bank account, if they're going to be gifted, I just need to kind of have a verbal communication with, okay, where's that money coming from? Where is it now? Stuff like that.
And by gifted, just for our listeners, that means like they have family members or awesome friends or something like that that's going to gift them the money for, let's say, that down payment or the closing costs.
Correct.
Okay.
And from there, we're going to approve you for your max purchase price. So I'm going to see what the most you can qualify for, because that's the first answer, the first question that I get, like, what can I afford? Okay, so we're going to see what you can afford. So let's say, for easy numbers purposes, I approve you for a $500,000 mortgage, meaning a $500,000 house based on the amount of money you have to put down, and that equals a $4,000 monthly payment, right?
Okay.
Let's just, for rough numbers purposes. Then we start working backwards. So let's say I approve you for that, and then you say, "Well, I don't want to swing a $4,000 mortgage." All right, great. Now we work backwards to find, okay, what monthly payment are you comfortable with, and then we derive a purchase price from that. So that's how you figure out what you can afford and what you want to afford. And
Okay.
then I send them back to you with the new numbers that they have and a better idea of, okay, Alex, we want to stay between 300 and 375.
Perfect. And when you talk about the monthly cost, that includes um, escrow for home insurance and taxes
Mhm.
and the insurance on the loan itself. So that just so everybody knows, like that's a full encompassing number. It's not like, oh, here's your number and you need to do the math on the other side. Like the numbers you give them are their full payout each month.
Correct.
Like
For the mortgage
like,
obligation, the only thing that they're going to need to make sure they can budget for is going to be like utilities,
right.
stuff like that. The HOA due, I'm going to make sure you can afford that. You will pay it separately. You do not pay that with your mortgage, but it's in my cash flow to make sure that you can afford it. So when we talk numbers, we're talking total monthly obligation. And
Okay.
I like to use that word instead of monthly payment because a monthly HOA due, it's not a part of your payment, but it's something that you pay monthly, right? So
Right.
that's why I use the terms total monthly obligation to where we know, all right, my mortgage may be, $1,700, but with my HOA dues, my monthly obligation is 1,900.
Right. And when
So
you
we
do
have that
your
conversation.
investigation on the back end, you're going to see their car payment that they do and all
Mhm.
their other debts, their school debts or whatever that is. So you're already going to have all that information. They don't have to do anything to get that to you. You're going to be able to bullet that out and take that
Mhm.
into account. And that's part of how you come up with the number for the house they can
Mhm.
afford.
Correct.
Okay.
Exactly. And I get all that from the credit check.
Right. Yeah, it's the biggest part, and it's just not that big of a deal, honestly, compared to like
Mhm.
how people weigh it. They think it's gonna really mess up like their
Yeah.
whole life if they get their credit score pulled. But
Yeah. You've been working that credit score. Credit's like a muscle. You need to exercise it for it to grow. But it's there to use
absolutely.
for purchasing a house, for buying a car, stuff like
Yeah.
that.
So you said it could take a day. So they get you all their pay stubs, they get you their information, and you get them back their pre-approval letter
Hmm.
with the number on it, and then we get to go shopping. So
That's
then we
it.
finally have a bracket and we can say, okay, we want all the houses in Murray Hill up to 375. Boom, boom, boom. And we figure out if that's still the area they want to live in for that price point, if they want
Hmm.
to move more west to get more house,
Correct.
more land, or whatever area of town, of course, fits them.
Exactly. Yeah, that's how we do it. And then I always price out properties before clients make an offer. So let's say, their max is 375, but they just really love this 385 house that we saw it, we love it, we want to go see it, but we just don't want to swing that monthly payment. They may be more comfortable with the monthly payment than what they think, especially with only like a $10,000 difference like that. So that's something I will then also. It's just important to keep me updated as we're going to look at houses. You know this, but I'm sharing this with the potential clients
Or
watching this video. Keep me as updated as you can. That way, I can be as helpful as I can be. I don't expect them to know everything that I can do, but if as long as I'm up to date, I can step in and be like, hey, let's price this out and see what it looks like.
yeah, you're my lender wizard. You're always moving things around, making it work. That's what we want. That's what we need. And you also can show them the difference in like sliding scale of like if they put down 3%, 5%,
Mhm.
30%, because some people think that they want to put all this money down, but then you show them the sliding scale and they make a different decision. And we always appreciate that information as well.
Correct. Yeah, absolutely. So that's all going to be within. Once we find a kind of a happy place for your monthly payment, I'm going to send each client a link, and you're going to see that link as well. It's going to have the slider. That's what she's talking about is a slider that shows how your monthly payment changes based on different loan parameters, and that's something we can look at because it's easy to talk about, but a lot of times making things visual makes it more palatable for someone to understand.
Yeah. Visual learning. And also, it's like, oh, it's so much numbers. But then when you see it, you
Mhm.
can kind of take a second and take it in.
It's as clean as it can be for mortgages.
Yeah. It's just work. It's
It's
just lending.
just lending.
What? Like it's
Just
hard?
lending. Yeah.
Okay. Well, that's what I wanted to talk about today. So thank you for breaking down the process. It sounds like it's actually pretty simple, which I already knew, but so many
Absolutely.
people don't. And it kind of all starts with that first phone call. So I hope that we get to have some more phone calls soon.
Lovely. Alex, thank you for your time.
Thank you for your time. Bye,
All
Gunnar.
right. Bye.